Good morning, students. If you can tell me good morning as well, I want to hear from you. Right, ladies and gents, you remember last time we did question 4, it dealt with a specialized mining vehicle. So I've got a picture here, a photograph of a typical mining vehicle. Now you can see, I mentioned last time, it is huge. Good morning, Priscilla. Um, you can see it's huge. I described it last time, and I said when I stand upright next to one of those, I don't even reach the top of one of the tires. Good morning, Norma. So they are huge. If you have a look at that picture, you can see there's a motor vehicle next to it, and it looks like it's dwarfed by that mining vehicle. Uh, if you can see my cursor, there are steps you actually have to walk up there if you want to go and drive it. You have to climb those stairs there, all the way up there. There's a ramp that you can walk, and this little box there, that is where the driver sits. So you can see it is a huge vehicle, right? So that is why those tires are so expensive, why the engine is so expensive, and then the main body part as well, why that's so expensive. Okay, so let us go back to our question now. Let me just see in the chat box. Good morning, everyone. So now we are going to go back to the question first of all. So let me just find it so that we can get a link with where we were last time. Right, so that is the question that we were working on, question number 4. And as we said, our main focus would be on the replacement of parts. Now, last time we did everything except the replacement of parts. So today we will hopefully complete that part. So where we ended last time, we determined the cost, the total cost of the specialized mining vehicle. We allocated the directly attributable cost over the various significant parts, or the purchase prices of the significant parts. We drew up a table. We calculated the depreciation for the year ended the 31st of July 2006. And then we also did an impairment test, right? So that is where we ended last time. You remember we drew up this table, and we ended right at the end of the year. We compared the carrying amount with the recoverable amount, and we saw that there was actually no impairment because the recoverable amount exceeded the carrying amount. So now we've got to go to the rest of this question. So let us scroll back up, and this is basically the main focus of our class today, the replacement of a part. Now, you remember we finished at the end of July, the 31st of July, 2006. So now we've got a new date here, the 30th of September. So that falls within which financial year? If you can please just type for me, which financial year does that fall in? Can you type for me? Remember, the years end on the 31st of July each year. This now takes place on the 30th of September 2006. So which financial year does this fall in, this replacement of the damaged engine? You can type for me there, which financial year? Cynthia? It falls within the calendar year of 2006, thank you. But which financial year? The year ended the 31st of July, 2000 and the year ended 31st of July, 2000 and? Must I type it on your behalf? No, not 2005 either. Remember, the financial year we are talking about starts on the 1st of August. Oh, there, Mr. Borman saved you, right? So the financial year starts on the 1st of August 2006, and this second financial year then ends on the 31st of July 2007. You all got that? So we're talking about the 2007 financial year, even though this event occurs during the calendar year of 2006. All happy with that? Yes? No? Are your fingers too cold to type? Thank you, Cynthia. There we go. Okay. So now let's carry on and we read the rest of that paragraph. So they say on the 30th of September 2006, the engine was damaged beyond repair and replaced by a new engine at a cost of 950,000 rands. And then they say the supplier, this is now the supplier of that new engine, granted a credit of 115,000 for the damaged engine. So what does that sentence mean? It means the supplier of the new engine, we're going to acquire it at 950,000 rands, but they're going to give us a trade-in value. They're going to give us a trade-in value of 115,000 rands. So that means they are probably going to use that engine and recondition it and possibly sell it after it has been reconditioned. But the fact remains that 115,000 rands that we get as a trade-in value, that basically represents which value for us for that old damaged engine. If you can type for me, there are three possibilities. We've used three terms for that already. If you can type for me there, what does that 115,000 represent? You can type either one of those three values that we've mentioned last week. What value does that 115,000 represent? Looks like your fingers are too cold to type this morning. Type for me. We use three different terms. The one being used by IAS 16 is the recoverable amount. That is the value in use, or in this case, it's not going to be value in use anymore. It is going to be the fair value, the value that we can sell it for, or in this case, that we get a trade in for. Or it also uses the term salvage value. So that is the salvage value or the scrap value, if you wish. Right. You remember those terms that we used last time. Then it tells us the useful life of the new engine is 5 years and the residual value is 120,000 rand. So that relates to the new engine. Now, ladies and gentlemen, I'm going to start on a blank whiteboard here, if you wish, and then we're just going to discuss the major or the main principles of the replacement of a part. So I'm just going to stop sharing that document for the time being. And then I'm going to create a blank sheet for us. Right, so here we've got just a blank Word document. As you can see, it was last modified yesterday at 17:49, 10 to 6 yesterday evening. So clearly that was when I was doing my preparations for today. Okay, so when it comes to a replacement of significant parts, when it comes to the replacement of a significant part from an account perspective, this involves basically 4 steps. This involves 4 steps. So what are those steps? So let's have a look at the first one. What is our step 1? Our step 1 is bring the depreciation up to date. Right. So that is our first step. Bring the depreciation up to date. What does that mean? It means we have to depreciate that part, that significant part, from the date that we last depreciated it. And that date on which we last depreciated it would be normally at the end of your previous financial year. So now you've got to bring the depreciation up to date from the beginning of your financial year, the last time that you calculated depreciation on that part, up until the day or the date on which this replacement is going to take place. So first of all, you're going to bring your depreciation up to date. Then secondly, ladies and gents, then you are going to calculate and record the impairment loss. And I'm going to type in brackets if any. So there might not always be an impairment loss, but if there is an impairment loss, in other words, if your recoverable amount or salvage value is less than your carrying amount, then there will be an impairment loss. And then you've got to calculate that impairment loss and you have to record the impairment loss. The next two steps I think should be fairly obvious. Your third step is to de-recognize the old part. De-recognize the old part. What does de-recognize mean? You'll remember when we dealt with both the conceptual framework and IAS 1, we said the process of de-recognition is to get rid of any balance that relates to that specific asset, or in this case, to that specific part. Now, we already know at this stage there are two balances in our books of account, in our ledgers, which relate to this particular asset. The first being the cost of the asset, as we know that will carry a debit balance, and secondly, the accumulated depreciation on that part, which we know will carry a credit balance, right? So it means we have to get rid of these two balances because we're no longer going to own this part. We are going to sell it to that scrap dealer or to that a supplier that's going to be supplying us with a new engine. So therefore, we do not own it anymore. So there should be no further balances in our books of account relating to that old part. And then the fourth step, I think, is probably the most obvious one. They are going to recognize the new part. We are going to recognize the new part. Okay, so those are the four steps that are involved in the replacement of a part. Okay, any questions on that, ladies and gents? If you can just tell me if you've got any questions on those steps. Welcome to type it or to ask it in person. No questions, thank you, Naira. No questions from anyone else either? No, okay, thank you so much. Okay, so now let's go back to our question itself. Now we've got to complete those four steps, and now we have to go and first of all bring our depreciation up to date. So how do we do that, ladies and gentlemen? Perhaps you can type for me again there. What do we have to calculate before we can calculate depreciation? We've already done this last week, but perhaps we can just talk about that again. What do we have to calculate before we can calculate depreciation? The what? The something, the, and then two words, the. We calculated it last week already. The depreciable amount. We've already calculated the cost, Priscilla. Thank you. Remember, we've calculated the cost last time. We also looked at the residual value, how we calculate that. Well, it was given in this particular question. And then we said the depreciable amount is the difference between the cost and the residual value. In other words, it is the value that you actually want to write down as depreciation during the useful life of that particular asset. So let's see, we have calculated that already. Where did we calculate it? In this allocation table of ours. So now we're talking about the engine. Remember, it's the engine that is being replaced. So we've already said that the cost that we have to capitalize, we said that last week, was 908,286. We saw that it had a residual value of 150,000 rands. So therefore the depreciable amount was 758,286. So that still remains our depreciable amount. So now we've got to go and calculate depreciation for this particular year from the beginning of the year until the date that we are replacing the part. Okay, so let's first of all see what is the useful life. The useful life, 4 years. So therefore, if we want to calculate the annual depreciation, the depreciation per year, we have to divide the depreciable amount. That's 758,286. We divide that by 4. That then gives us the depreciable amount, right? The depreciable that then gives us the depreciation, I should say, the depreciation per annum. Sorry for that, depreciation per annum. So now we've got to go and figure out how many months during the course of this financial year. Remember, we are now in the financial year ending on the 31st of July 2007. For how many months did we actually have the use of this engine? You can use your fingers again. Tell me how many months, please. So we start with August, September. And when was it replaced? When was it replaced? Let's have a look at that question again. It was replaced on the 30th of September. 30th of September 2006. Our year started, this financial year started on the 1st of August. So we only made use of, we only had that engine available for use for August and September. How many months does that give us? How many months does that give us, ladies and gents? Only 2 months. You agree? Type for me there. 2 months. Thanks, Naira. Yes. Thanks, Anil. Yes. So we only had it. Thanks, Anil Siwe. We only had it available for 2 months. So in order for us to bring the depreciation up to date, we now have to go and depreciate that engine for 2 months during the course of this year. So that will be, well, there are 2 ways in which you can do the calculation. You can simply take your depreciable amount, divide it by 4 to give you the annual depreciation, and then you will multiply by 2, the 2 months that it was available, divide by 12, or like we did in this table, you could have taken your depreciable amount first, divided by the useful life in years, and then calculate your annual depreciation first, and then you take that figure and do the same year, multiply by 2, in other words, the 2 months in which it was available, divide by 12, the total number of months in a calendar year. So that gives us a depreciation for those 2 months of 31,595. Is that all clear there? Priscilla, you say no. What is not clear? If you can just maybe raise your hand and ask the question and tell me what is not clear. Good morning, Zentle. It is still the question 4 that we were busy with, that we started with last week. So it's still that question bank that you find under content. Then the subfolder is called notes and question banks, the one that deals with property, plant and equipment. So it's still the same one that we started with this year. last Monday. Priscilla, I don't know what is not clear if you're not going to tell me. So if you can just unmute your mic and then tell me then about the depreciation of the 2 years. Is that not clear? Okay, simply pleasure. Look, we said the financial year, they end on the 31st of July each year. Now, last Monday, you remember we completed the financial year, which ended on the 31st of July 2006, right? So we did that financial year. The financial year ended the 31st of July 2006. In this question, they say on the 30th of September 2006, so that is 2 months after the previous financial year, the engine was damaged. So our first step in this process is to bring our depreciation up to date. Now we know that the last time we calculated depreciation was the 31st of July 2006, the end of the previous financial year. And now this takes place, the engine that is going to be replaced takes place on the 30th of September. So we still use that old engine during August of this, the first month of this financial year, which was August, and the second month of this 2007 financial year, which was September 2006. Does that make it clear? It's so we used it for a further 2 months during the course of this 2007 financial year. Priscilla? Okay, right, so there we go. So now we've brought our depreciation up to date. So what is our second step? We've just had it in our blank worksheet, or the one that we started off blank. So what is our next step? Our next step is to calculate and record any possible impairment loss. Now, in order to do that, ladies and gents, what do we have to do? We have to compare what with what. If you can type for me again there. When you do any kind of impairment test, what do you compare with what? You've got to compare what with what. Type for me there, please. Even if you just use the abbreviations. You compare the chartered accountant, oh no, the CA doesn't stand for chartered accountant, it stands for what? You compare the CA, the carrying amount, with the RA. And that doesn't stand for retirement annuity. In this case, it stands for what? Hey guys, have you had your coffee yet? It stands for the recoverable amount. So you've got to thank you, Kaylin. There we go. Thank you, Anil. Perfect. So you are going to compare your carrying amount or your carrying value with a recoverable amount, right? So now we've got to see what is our carrying value. Thank you, Sanalisi. So now we've got to go and see what is the first of all, the carrying amount, right? The carrying amount, what was the carrying amount at the beginning of the year? What was the carrying amount at the beginning of the year for the engine? 829,298, right? You agree? And now we've depreciated it with a further 31,595. So we've got to take that 829,298 less the 31,595. So the carrying amount at this stage, after we've brought our depreciation up to date till the date of the replacement of that part, so our carrying amount is now 797,703. Do you all agree with that? That is our carrying amount as at the 30th of September 2006. Do you agree? Yes or no? Thank you, Anil. Thank you, Sanalisiwe. Yes, okay, so that is our carrying amount at that point in time, the 30th of September. Now I'm going to ask you a question. What is our recoverable amount on the 30th of September? If you can type for me, what is our recoverable amount? Remember, we also said that could be referred to as our salvage value. In this case, it really is a salvage value. What is our salvage value? What can we recover? Remember the recoverable amount, we can use the larger of each of either the value in use or the fair value. And in this case, we are not going to be using this machine into the future. So therefore, it will represent the fair value. What can we sell it for? What value can we get for it now? Type for me there, please. What is the supplier of the new engine going to give us a trade-in value for? No, what is the supplier going to give us the trade-in value for? What is the supplier going to grant credit for? Nkobile, thank you. There we go. Nkobile's got it right. The supplier is going to give us a credit of 115,000 rands. Remember, that is what they stated there in that sentence. They said there the supplier granted a credit of 115,000 for the damaged engine. So we are going to get a trade-in value of 115,000. So that means that is our recoverable amount, ladies and gents. So now let's go and compare the recoverable amount of 115,000 with the carrying amount. Let me just go down there. Where am I now? The carrying amount as it stands on the 30th of September, we compare that with the amount that is going to be given as a trade-in value for us. So therefore, what is the impairment loss? It is the difference between those two, between the carrying amount of 797,703 and the trade-in that we are going to be getting of 115,000. So that means our impairment loss is going to be 682,703 rands. Okay. So that is our second step, ladies and gentlemen, the second step. So maybe let's go and have a look at those journals now. First of all, when we are going to record the depreciation, record the depreciation, now please type for me there, ladies and gents, which account are we going to debit? Which account are we going to debit? We've spoken about that last week already, and I'm going to wait for you to type for me. I want you to type it for me perfectly. Which account are we going to debit when we account for the depreciation on that engine? Correct, Naira, depreciation. But now I want you to add something. Depreciation, what else? Remember, this company may have mining vehicles. They may have many categories of assets. They may have mining vehicles. They may have, for instance, property, fixed property. They may have other motor vehicles. They may have office furniture. They may have plant and equipment. So we're going to say depreciation. What is the overall category? Depreciation, then dash. What is this category of property, plant, and equipment? Depreciation, dash. What is the category? Mining vehicles, right? Mining vehicles. Thank you very much. There you go, Kaylin. There we go. Right. Thanks, Mrs. Moore. Thanks. I know Mrs. Moore, we were on the phone when the class starts. She had a little bit of difficulty with her. She's got a new computer. And that is always something to explore. Okay, so like Colin said there, depreciation, we're not going to use a colon. Remember, we're going to use a colon when it comes to the value of the asset, the cost and the accumulated depreciation. So here we're going to use a dash. Now type for me there, ladies and gentlemen. Remember, when it comes to the cost and the accumulated depreciation, there we're going to have various accounts, not only one account, various accounts for each significant part. So which account are we going to credit? If you can type for me, which account are we going to credit? Bear in mind the principles that we've discussed the other day, not even last week, the week before it was, 2 weeks ago. What are the principles that we've decided on. I think we call it our convention or our protocol to create the name for such an account. Where do we start? The name of what? What do we start with? The name of what? Type for me, please. We start with the name of the overall asset. And what is the name of this overall asset? It is mining vehicle A. And then we're going to use a colon. There we go. Then we're going to use a colon. In this case, it is mining vehicle A, colon. What is the name? Second thing that we mentioned, the second thing that we identify as part of the name of the account is then the significant part. So what is the name of this significant part? Yes, Anil, the significant part is the engine. Thank you, Anil. Thank you, Naira. So we have, thank you, Sanalasiwe. There we go. So it is mining vehicle A, colon, engine, colon, and then what will this account contain? The third thing that we identify as part of the name of the account is what will this account now contain? Thank you, Naira. Exactly. Thank you, Kailan. The accumulated depreciation. Right. So that is exactly how we are going to go and record that. So let's go and have a look at that journal entry. Right. There we've got it. I don't want to display the one below that here. So we're going to debit. Remember the date. The date is the 30th of September. When you get a journal entry to do or when you get a ledger account to do not forget about the dates. So we're going to debit depreciation dash the category of property, plant and equipment, mining vehicles. Then for that specific mining vehicle, we're going to credit an account called mining vehicle A, name of the overall asset, engine, which is the name of the significant part. What does this account contain, ladies and gentlemen? Now, we're going to discuss this matter of accumulated depreciation and impairment losses now within the next 10 seconds or so. So here they've credited an account accumulated depreciation and impairment losses. And we know that the amount involved was 31,595. We've just calculated it. Where was it there? Now, when it comes to the name of that account, ladies and gents, it's a little bit of a story. It's not that long a story, but let's discuss it in its entirety. You've got a choice here. As you know, if you are never going to have, you don't really know this in advance, but if you are never going to, or you never envisage to have an impairment loss, then you would call that account mining vehicle A, colon, or mining vehicle B or C, or whatever that specific vehicle's name is, colon, engine, colon, accumulated depreciation. Then when you have an impairment loss in the future, then you've got one of two choices. Then you can either create a totally new account, which you will then call mining vehicle A, colon, engine, colon, accumulated impairment losses as soon as you have an impairment loss. So then you'll have an accumulated depreciation account for that vehicle's engine, as well as an accumulated impairment losses account for that specific part of that specific vehicle. Now, you do have a choice of having two separate accounts. What we do in financial accounting too, to make life possibly a little bit simpler for us, is we use the approach, the second possibility, where you can have a combined account for all your accumulated depreciation and all your accumulated impairment losses. So that is the way that we do it in financial accounting too. But you must just be aware that it is possible that you can have two separate accounts for that. Now, under this new qualification, the diploma in accountancy, we do not do intangible assets. That is now done in a different year. But up to last year, we also always did property, plant and equipment, and then directly afterwards we did intangible assets. So just to illustrate both possibilities, what we used to do is to use the combined account, accumulated depreciation and impairment losses for property, plant and equipment. And then when we did intangible assets, we would separate the two. Then we would have something we call an accumulated amortization account and an accumulated impairment losses account. So both of them would be correct, but just to make life easier for us now, we're just going to keep on carrying on with using a combined account. Okay. Now, ladies and gentlemen, we had an impairment loss. So which account, where's that impairment loss? 682,703 Rand. So let's again talk about the journal entry. How are we going to record that? Which account are we going to debit? Which account are we going to debit now? Again, this is an expense. This is an expense. What are we going to call that expense? Does somebody want to type it for us there? Students, what are we going to call that expense? It's more obvious than you think. In this case, not depreciation. Remember, we've already debited depreciation. Remember, the depreciation is the systematic allocation of the depreciable amount over the useful life. This is now not the systematic allocation anymore. This is like damage overnight. Damage overnight. There we go. Thank you, Sanalisiwe. So we're going to get an impairment loss. Now, again, it is possible that we could have impairment losses on other property, plant and equipment categories as well. So just in case we do, we will specify in this account which overall category this relates to. So therefore, we're going to call that account impairment loss, and then a dash, and then the category of asset, which is in this case the mining vehicles, right? And then which account are we going to credit, ladies and gentlemen? Let's type the amount that we are going to credit now in its entirety there. I'll give you enough time. Type for me there. Remember those principles that we've spoken about: name of the overall asset, name of the significant part, and thirdly, what the account contains. So type for me there. I'll give you a full 40 seconds. Type for me the account that we are going to credit, please. Start with the name of the overall asset. Colon. Secondly, identify what significant part this relates to. Colon. And then what this account will contain. It's not just a vehicle, Priscilla. This is a very specific vehicle. A very specific vehicle. So what is the name of the overall asset? Hold out for me just the name of the overall asset. Mining vehicle A. Right? Landela, you're on track there. You're on track there, but you've only got 2 factors there. We need 3 factors. So we start with mining vehicle A. That is the name of this particular asset. Colon. What do we identify next? The significant part. Now type for me, what is the significant part we are talking about? Yes, Kaylin, you've got it spot on, except for one little thing. Except for one little thing. Thank you, Priscilla. It's mining vehicle A, colon, engine, colon, yes. But now it's not only the accumulated depreciation, it is the accumulated depreciation and impairment losses, right? So now we're talking about the possibility that we might be accumulating impairment losses as well. If you had been using the 2 account approach, if you had a separate account, you'd call that account mining vehicle A, colon, engine, colon, accumulated impairment losses. Naira, yes, there we go. There we go. Very, very good. Very good. We normally, this is now nitpicking. This is not so serious, but normally we would say the accumulated depreciation part before the impairment losses part, but that is not the end of the world. I mean, that is Like I say, that is almost now like nitpicking. Right, so let's have a look at that journal entry. There we go. By the way, there's the narration of the previous journal entry, which I had to hide because I wanted to hide this journal entry. So there we go. We're going to debit impairment loss, dash, which category of asset? Mining vehicles, all our mining vehicles. So there's an impairment loss on mining vehicle C and another one on mining vehicle F. All of the impairment losses would be debited to the same account. And then for each particular one, each mining vehicle, number A, another for B, another for C, and so forth, will then have a credit to mining vehicle A for this particular one, colon, engine to describe this significant part. And then if we are going to use the combined account approach, then we'll say, what does this account contain? It contains the accumulated depreciation and impairment losses. Or if you had been using the two separate account approach, that account would only have been called mining vehicle A, engine accumulated depreciation, and then this one would have been called mining vehicle A, engine accumulated impairment losses. But I still suggest you use this combined account approach, right? And there we have a narration. We've already calculated that amount, that the engine that was damaged and written off to a salvage value of 115,000 rands. Okay, so that is our second step. The third step in this process, as we've discussed earlier, the third step in this process is to go and de-recognize the significant part. So if we are going to de-recognize the significant part, as we've said about 40 minutes ago, it means we have to get rid of any balance that still contains anything that has to do with that old engine. Okay, so ladies and gents, if you can type for me, which two accounts do we have at this point in time, the 30th of September 2006, which two accounts do we have that contain anything to do with the value, in other words, the carrying amount of this asset? There are two of them. Which accounts do we still have? Which accounts do we have that contain the carrying amount of this particular mining vehicle A? You can just tell, you don't have to type out the whole names, the full names of the accounts, just the two, what those two accounts contain. One account contains the what of the engine. Type for me there, please. One account contains the what of the engine. The what? Type. The cost. Thank you, Nkubile. Right. So the one, thank you, Mrs. Moore. The hint there is when we acquired it. So the one account contains the cost, and the other account contains the accumulated depreciation and impairment losses. Now, ladies and gents, listen carefully. That account that contains the cost, the account that contains the cost, does it currently have a debit or a credit balance? As we stand, does that account that contains the cost of the part, does it have a debit or a credit balance now at this point in time? Type for me there, please. Debit or credit? Got a difference of opinion there. Thank you, Mrs. Moore. There's a good hint. So type again. Those that had it incorrect. Thank you, Landela. Thank you, Dale. Thank you, Naira, up there. Thank you, Anil Anwar. It has a debit balance, right? So that has a debit balance. So if we need to get rid of that debit balance, what do we have to go and do with that cost account now? What do we have to go and do with it? Debit it or credit it? Thank you, Anil Anwar. So that means now we have to go and credit that account to get rid of the balance. Right. Let's look at the other part, the other account that contains part of the value, part of the carrying amount of this asset. That account we said is called mining vehicle A, engine, accumulated depreciation and impairment losses. As it stands now, currently on the 30th of September, before we derecognize it, what kind of a balance does it have now? A debit or a credit balance? Anil Anwar, you're on fire. Now, as it stands, it has a credit balance, right? So if we want to get rid of that credit balance, what do we have to go and do with that account now? When we derecognize it, do we now have to go and debit or credit that account now? Exactly, Naira. Exactly, in Kabile. It has a credit balance. We want to get rid of that credit balance. Thank you, Landela. It means we now have to go and debit that account. Right. So let's go and do that. Let's go and derecognize the old part. Let's have a look at that journal entry. So that is exactly what we've got there. So we are going to debit mining vehicle A, engine, accumulated depreciation and impairment losses. That is what that account contains. What is the total balance on that account now? The total balance on that account is 793,286. How did we get that? How did we get that? How did we get that? It is the depreciation in the previous year. Okay, add it up for me, ladies and gents. If you've got a little calculator handy with you there. If you've got a calculator handy, by how much did we depreciate last year? 78,988, right? 78,988,000. So that is our depreciation last year. How much depreciation did we write off on it this year for the first 2 months? 31,595 rands, right? So if you add those two together, that gives you the accumulated depreciation that we must get rid of. But we also accounted for an impairment loss of 682,703 rands. So if you add all those three amounts together, please do that. What amount do you get? You can type for me there. What amount do you get if you add them together? Add up those three figures. There we go. 793,286. Thank you, Dale. So if you add them all up, that is the amount that is currently sitting as a balance on the accumulated depreciation or the accumulated depreciation and impairment losses account. Right? Quite correct. Therefore, if we need to get rid of that account, what do we have to go and do? We have to go and debit that account with 793,286. What is the amount that is currently sitting as a balance in our cost account? What is the amount that is currently sitting as a balance in our cost account? What did we capitalize as the cost of the asset? There we go. When we did our allocation table, we decided, we calculated that we've got to capitalize a cost for the engine of 908,286,000 rand. So that is sitting under the cost of that parts account as a debit balance. We want to get rid of that balance, so it means we have to go and credit that account. So there we go and do exactly that. We go and credit mining vehicle A, engine, cost with 908,286,000 rands. Right. So that means we now have a debit, a total balance. If we ignore that, we've got a total balance on the debit side, or a total transaction of 793,286. And on the credit side, we've got 908,286. What do we need to balance this journal off? We need an additional debit of of 115,000 to make this the debit side and the credit side balance with one another. And what does that 115,000 represent? It represents your trading value, right? It represents your trading value. And from whom are you going to get that trading value? Who is going to give you credit? Who is going to provide you the 115,000 credit? The what of the new machine? If you can type for me there, ladies and gents, the what of the new machine. What do we call that person or that company or that business? The supplier. Fantastic. Thank you, Anil Anwar. The supplier. The supplier of the new engine grants us a trade-in value. Now, we must also bear in mind that we are going to be purchasing on credit from that same supplier a new engine. But because we are going to be getting a trade-in value on the old engine, it means we are going to pay a little bit less. We are going to be paying 115,000 rands less than the actual purchase price of the new engine. So we know that when we are going to be buying the new engine, we are going to credit the creditors. But we're not going to pay that creditor the full amount of the purchase price of the new engine, because that same creditor is going to grant us a trade-in of 115,000. So which account would be the appropriate one to go and debit in this case with that 115,000? If you can type for me there, the one that represents a supplier that grants us credit. What do we call a supplier that grants us credit? We call that supplier a what? Thank you, Dale. There you go. So we call that supplier who grants us credit terms, we call that person or business a creditor. So therefore, we are going to debit creditors or trade accounts payable, if you wish. Right, creditors or trade accounts payable. Trade payables, thank you, Mrs. Moore. Okay, so there we have completed the third step. The third step being to de-recognize the old parts. And now we have to go to the fourth step. Now you remember in our initial blank worksheet, we said the fourth step is to do what? The fourth step is to go and recognize the new part. We have to go and recognize the new part. How do we do that, ladies and gentlemen? Now, very simple. We are going to debit the cost of that particular part, and we are going to credit creditors. And that we've got in this final journal entry here. So to recognize it, again, this takes place on the 30th of September. Which account are we going to debit? It is still the same overall asset. This still relates to mining vehicle A. Which account are we going to debit? We're going to reuse. Now, this is important to note, ladies and gentlemen. Please, please, please listen carefully. We are going to use or reuse the same account that contained the cost of the old engine, right? So therefore, we're going to still call it mining vehicle A colon. What is the name of the significant part? Engine colon. What does the account contain? Cost, right? So they've given us the cost of the new engine, which is 950,000 rands. We're going to credit a supplier, which is giving us credit. So it's creditors or account payables, 950,000 rands. Now, ladies and gents, I just want to change my autosave here to off. I don't want to save this part that I'm going to type here. What are the words that you do not see? I know that is the hardest question on earth. You cannot tell something that you cannot see. But let me show you what you do not see in this account or in these accounts. What was the name of the account that contained the cost of the engine? What is the name of the account that contained the cost of the engine when we purchased the engine? When we purchased it. That account was called mining vehicle A colon engine cost. It was not called mining when we purchased it. Remember when we purchased it, we did not call that account mining vehicle A old engine, right? Because when we purchased it, it wasn't an old engine. Then it was a new engine. Okay. So there's no account that is called old engine, right? That doesn't exist. Do not write that there. Not old engine. And the same with this account, where you are now going to capitalize the cost of the new engine. Do not call that new engine, right? Do not call that new engine. You are reusing the same account, so it is still just called engine, right? Is that clear, ladies and gentlemen? Do not use the word old engine, and do not use the word new engine there, because you are using the same account. It is still just engine. Okay, I don't want to run too much over my time, ladies and gents. There's just one other thing I want to do. I just want to ask you, first of all, now, is that clear? Do you understand that it's not now suddenly old engine or new engine? The account, the significant part is still just engine. Are we clear on that? Yes or no? Thank you, Kubile. Thank you, Dale, Andela, Anwar, everyone. Thank you. Right. Okay, so that account's name still remains as it was originally. Then we must just do two other things in connection with this question. We must go and calculate what was it again? The depreciation for the year. Now you know how to do that, ladies and gentlemen. So let's maybe just go through this quite briefly. So we know that in the case of the tires, we had a depreciable amount. Where was it? Depreciable amount of 427,428. Now we are going to depreciate it for a full financial year. We've already calculated the annual depreciation, so that will be the depreciation on the tires for this particular financial year. Right. Also, when it comes to the main body, we've used that main body for the full 12 years. So last week, we've already calculated the annual depreciation of that to be 146,952. The main body was used for the full financial year. So we are going to calculate depreciation for the full year of 146,952 rands. Also last week, we saw that the annual depreciation on, what was that, the safety certificate was 2,750 rands, right? So we used that certificate, was available for use for us for the full financial year. So we're going to depreciate that by 2,550 rands. But now what we must remember when it comes to the engine, remember the old engine, even though that account is not called old engine, but physically it was an old engine. That old engine was derecognized on the 30th of September 2006. So therefore, the carrying amount that we carry forward for that old engine is zero. We started afresh with a new engine on 1st of October or the 30th of September 2006. We acquired a new engine, right? That new engine was acquired at a cost of 950,000 rands, right? How did we pay for it? We got a trade-in value of 115,000 and we actually paid the difference. So now we must also go and have a look at its depreciation. And we saw in the question there, they said this new engine has a useful life of 5 years and a residual value of 120,000 rand. Residual value of 120,000, useful life of 5 years. So now to go and calculate the depreciation on that new engine, let's go and have a look. We do the same. We say the cost is 950,000 rands. The residual value is 120,000 rands. So therefore, the difference between those two is our depreciable amount, the amount that we want to write off over the useful life until we reach the depreciable value at the end of its useful life, right? So therefore, what will be the annual depreciation on this? the annual depreciation would be 850,000 rands. Sorry, 830,000 rands divided by 5. So that will give us our annual depreciation. So for how many months do we have to depreciate this new engine for this financial year? If you can type for me there, please. For how many months do we have to go and depreciate that new engine? Ella, when did it become available for use? Maybe you think about that. On which date did it become available for use for us? Not on the first day of the financial year, which was the 1st of August. Thank you, Anil Anwar. Remember? Thank you, Dale. There we go. Remember, we only started using it from the 30th of September or the 1st of October, if you wish. So if we take October, November, December, January, February, March, April, May, June, July, that gives us 10 months. Like Anil Anwar and Dale said there, right? So now we have to go and depreciate it for 10 months. So therefore, we're going to take that annual depreciation, if we haven't calculated it here, but as you know, it is the 830,000 divided by the 5 years. Now we have to apportion that to the 10 months that it was available for use. So we multiplied by 10, above the line, 10 months that it was available for use, divided by the 12 months in a full calendar year. So that gives us a depreciation of 138,333 rands. Now, I know Mr. Borman is going to take over the second segment of this class. I maybe just want to ask if I can maybe just ask Mr. Borman if I can take 10 more minutes or not. Mr. Borman, can I use another?
Anytime, Mr. Van Rensburg, you can have half an hour.
Thanks so much, Mr. Borman. I hope not to take more than maybe 10 minutes. I always encroach on everybody else's time. I'm very sorry about that. Okay, ladies and gents, so what I just want us to do is to do the impairment test, and then also perhaps just record the depreciation for the year. Okay, so let's go and do the impairment test. Before we can do the impairment test, I know I've asked this question before, but only I think one or maybe two students answered it. So let me ask that again. If we do an impairment test, what do we compare with what? What do we compare with what? The chartered accountant with a retirement annuity, isn't it? So CA with RA. What does the CA stand for? There we go, Naira. Thank you. The carrying amount or carrying value, as Kalen says. Thank you, Anil Anwar, with the recoverable amount. Right, so that means we first have to go and calculate the carrying amount. So let's go and calculate the carrying amount, ladies and gentlemen. So how do we do that? We take our carrying amount at the beginning of the year. Let's maybe just look at the tires. Let me just see if I'm in the correct accounting period. So we take the tires. What was the carrying amount at the beginning of the year? 368,063. What is the depreciation that we've written down during this year? Is 142,478, 476. So therefore, if we take carrying amount of 368,063 less the 142,476, it gives us a carrying amount of 225,528 rands. Let's also do let's do what would eventually become our PPE note as well. How do we calculate that? Remember, that amount, that carrying amount consists of what? It consists of your cost less your accumulated depreciation, right? The carrying amount consists of the cost less the accumulated depreciation. So what was the cost? Right at the beginning, when we capitalized the various costs, we said the cost to be capitalized is 427,428. So we carry that down to our PPE note, 427,428. In the case of the accumulated depreciation, what was our accumulated depreciation at the end of last year, which is the same as at the end of this year? It was 59,365 at the beginning of the year. We depreciated it by a further 142,476. So if we add those two figures together, we get an amount of 201,841 rands, right? And then we simply take our cost less our accumulated depreciation. That must also give us the carrying amount. In the case of the engine, we know that the old engine was de-recognized at the end of September, so we started afresh on the 30th of September with a new engine. So what is the cost of the new engine? 950,000 rands, right? The cost. What was the accumulated depreciation at the beginning for this engine? 0. We only purchased it, we only acquired it during the course of this year. So there was no opening balance on accumulated depreciation. Then the depreciation for this year was 138,333 rands, which means that our accumulated depreciation at the end of the year is 138,333 rands, right? So what is the carrying amount, ladies and gents? The carrying amount for that engine at the end of the financial year is the difference between the two, which gives us the 811,667,000. Now let's have a look at the main body. You remember last week we finished with this. We said that the carrying amount for the main body was 2,343,056. But let's go and split it up into its components. The component that holds the cost, we said the cost is 2,404,286. That is still the cost, so we carry that down as the cost of that particular part, the significant part, and which is the main body. And then when it comes to the accumulated depreciation, what was our accumulated depreciation at the end of the previous year? At the end of the previous year, the accumulated depreciation, at the end of the 2006 year, it was 61,230 rands. How much did we depreciate it by this year? We depreciated it by 146,952 rands. So therefore, what is our accumulated depreciation at the end of this financial year? 208,182. We deduct the accumulated depreciation from the cost. That gives us a carrying amount of 2,196,104 rands. Right. Let's have a look at our safety certificate. What was the cost of the safety certificate? 11,000 rands. So we go and put it in preparation of our PPE note. The cost was 11,000 rands. What is our accumulated depreciation at the end of the 2007 year? Well, first we have to see what was the accumulated depreciation at the beginning of the year. So the accumulated depreciation at the beginning of the year, which is the same as at the end of last year, was 1,146,000 rands. And then by how much did we depreciate it this year? We depreciated it by 2,750 rands this year, which means that our accumulated, the total accumulated depreciation at the end of this financial year is 3,896 rands. So therefore, carrying amount, it is the cost that we determined right at the beginning of this lifetime of this asset, minus the accumulated depreciation at the end of this financial year gives us the carrying amount for that. So now, ladies and gents, to see what our carrying amount for this asset is, remember we must realize, or we must go and determine whether we want to impair the asset, not its components, the asset, the overall asset. The overall asset that we are looking at is mining vehicle A, right? That is the vehicle, that is the asset. So therefore, we're going to say we add up across the balances, not the balances, the carrying amounts of all the significant parts. So this overall asset has got a carrying amount at the end of the 2007 financial year of 3,240,462 rands. And then we can go and see, what did they tell us? What was the recoverable amount, which we know is the highest of the value in use, or the fair value? They say that at the 31st of July 2007, the recoverable amount was 2,700,000 rand. So let's go and see, is there an impairment? We've got a recoverable amount of 2.7 million rand. We are carrying a value, or an amount in total in our books of account of 3,240,000. So now you can just type for me yes or no, please. Are we carrying an inflated value or not? Yes or no? Are we carrying an inflated value? Yes or no? Are we carrying an inflated value in our books? Is the value that we are carrying in our books, can we recover it? If we should either use it, carry on using it, or if we are going to sell it. The maximum value that this asset has for us, if we continue using it, or if we should sell it, maximum value is 2.7 million. That is what is meant by the recoverable amount. Right, that is what is meant by the recoverable amount. If we continue using it, or we should sell it, the higher of the two, the maximum benefit, the maximum economic benefit that we can get from it, if we use it or if we sell it, is 2.7 million. But we are carrying a value of 3.24 million. So is it overstated or not? Yes or no? Nkobile, yes, you're correct. It is overstated. It is overvalued. Thank you, Dale. It is overstated. I said jokingly last week, we are carrying pie in the sky. That additional 500,000 we are never going to recover. So we are carrying an imaginary, a hopeful value of over 500,000. Too much, right? We cannot value it truly at 3.2 million, because even if we should sell it, or even if we continue using it, the maximum economic benefits we can derive from it is only 2.7 million. So therefore, ladies and gents, there is an impairment loss. We have to go and write it down. Thank you for all those answers, students. I love it when you participate. So therefore, because we are carrying so-called pie in the sky, it is an inflated value. So we have to go and write that value down to its recoverable amount. So the amount that we will have to go and write down is 540,462 rands. The difference between what we are carrying before we do the impairment test and its recoverable amount. So that will be written off as a loss. Now, I just want to ask Mr. Borman, can I take another 10 minutes? I'm pushing my luck here. Thank you, Anil Anwar.
That's fine, Mr. Van Rensburg. Please take as much time as you'd like to, because I'm now quickly doing the property, plant and equipment note for this specific question, and I'm going to show it to the students just now.
Thank you so much, Mr. Borman, because you know I feel so guilty. I promised that I would be done within an hour, but I get carried away. So I just want them to do one more journal entry. I know it's not required in the question, but I'd like them to get that picture as well. And if you are going to show them the note as well, then I think we have done more than than what is than not what they should know. They should know everything. Obviously, that is our mission. We want them to know everything about property, plant, and equipment. Okay, so what I want us to do now, ladies and gentlemen, I know that it's not required in the question itself, but I also want us to go and record that journal entry for this year's depreciation. There we have this year's depreciation, and then I'm going to ask you a little trick question after that. Okay, first of all, this is not a trick question. This is an easy one. First of all, when we are going to record the depreciation for the year, right? Which account are we going to debit? You can type for me there, but this is now the third or fourth time I'm asking this since last week. Which account are we going to debit? Type for me there, please, ladies and gents. Which account are we going to debit when we are going to record the depreciation expense? Yes, Anil Anwar, totally correct. Or let me say, almost totally correct. We are going to debit depreciation. And then dash, what else? The category of asset. So we're going to call it depreciation dash mining vehicles. Right. Thank you, Landela. Okay, so let's go and do that. Thank you, Dale. So there, Dale's got it perfect. I would just say mining vehicles. So perhaps there might be some other mining vehicles that also have that. So we're going to debit that account. So let's go and do that little account, that little journal entry. So we're going to debit depreciation mining vehicles. Right. Depreciation mining vehicles. This is now, what is it, 2007. This is July. And this is the 31st. On the 31st of July, we are going to debit depreciation mining vehicles, the category of assets. Now, which accounts are we going to credit, ladies and gentlemen? I'm going I'm just going to type each of them there. Which accounts are we going to credit? We are going to credit mining vehicle A, name of the overall asset, right? Mining vehicle A, let me copy that whole part. Copy. So mining vehicle A colon engine colon accumulated depreciation and impairment losses. With which amount are we going to credit that? With which amount are we going to credit that? With, what are we talking about now? The engine, yes. With 138,333. 138,333. Then we're going to have another account, ladies and gentlemen. What are we going to call that account? What are we going to call that account? The second account we need, mining vehicle A, but now we've got another significant part, the main body. Mining vehicle, main body, accumulated depreciation and impairment losses. So with how much do we have to go and credit that account? The main body, How much did we depreciate it this year? Where is it? There. 146,950 rands, right? So let's go and do that journal as well. Now we need another credit account, ladies and gentlemen. What are we going to call that credit account? What are we going to call that account? Mining vehicle A. We've got one for the engine. We've got one for the main body. We also have a significant part called the tires, right? The tires. How much are we going to credit that account? Let's go and have a look. How much did we depreciate the tires by this year? Tires is that column. How much did we depreciate the tires with this year? Right, how much did we depreciate it this year? Let's go and do our journal entry by 142,476,000. Do we need, just start for me, yes or no, please. Do we need another credit account? Do we need another credit account? Yes or no? Speak to me. Yes or no? Yes, thank you. Thank you, Dale. We need another one. Also, we need one for what? For the safety certificate, ladies and gentlemen. Don't forget, we regard that as a significant part. So we also need another one. We need another credit account. So let's go and create that account. Now, mining vehicle A colon, the significant part is now the safety certificate. Safety certificate, accumulated depreciation and impairment losses. Let me just make this a little bit clearer to read. Okay, and by how much are we going to credit that account? Let's go and see how much depreciation did we write off on the safety certificate this year, an amount of 2,750 rands. Right. So let's put that in our journal entry there. $2,750,000. So that means, ladies and gentlemen, when we calculated the depreciation on the engine and the main body and the tires and the safety certificate, then how much is the depreciation expense that we are going to be writing off on this asset which is our mining vehicle A, which will form part of the total depreciation on all our mining vehicles? Let's go and have a look. Let's go and have a look. There we've got the total depreciation. We've got the depreciation on, what was it, the tires for the year, the engine for the year, or the new engine. Remember, that's just the new engine for the year. On the main body, on the safety certificate. So what is the total depreciation expense that we are going to be writing off now at this point in time at the end of the year on this particular asset, which is mining vehicle A? 430,511. Now, I would be very disappointed if all our credits do not add up to our debits. Can you just check that for me? I just realized I never double checked that. Does it add up? Do your total credits add up to that debit? You can just start for me, yes or no, please. Do your credits of 138,333 plus 146,952 plus 142,476 plus 2,750, do they add up to 430? Thank you. Thank you, Dale. Thank you, Mrs. Moore. Thank you, Kaylin. So that is what our journal entry is going to look like at the end of the year, right? So the depreciation on all our mining vehicles, remember this entry only relates to mining vehicle A. We might have another entry if, let's say, mining vehicle F. Well, all the mining vehicles will be depreciated. Then we're going to debit, in the case of mining vehicle F, we're going to debit depreciation dash mining vehicle, same account, not a different account, same account as this, but now we'll have different accounts for mining vehicle F. So then we'll have mining vehicle F, colon, engine, colon, accumulated depreciation and impairment losses, whatever we've calculated on mining vehicle F. So for mining vehicle B and C and D and F, all of these accounts will be separate accounts. That particular asset will have its own accumulated depreciation and impairment losses account, just like it has its own cost account. But for all your mining vehicles, you're only going to have one depreciation account for the category, which is for all your mining vehicles. Just like you would have a depreciation account for your office furniture or a depreciation account for plant and machinery, but all the different parts of machinery and all the different parts of plant will have an individual accumulated depreciation and impairment losses account, just like they will have individual cost accounts. Now I am to do what I said a few minutes ago. I'm going to ask you a trick question. When you get to your profit before tax note, that you know in your profit before tax note, all of those expenses that you've allocated to cost, if you consider them to be material either in value or material in nature, then you actually go and provide this additional information in your profit before tax note, detailing the nature and amount of that expense that has been allocated to your cost function. So let's say, for instance, we had depreciation on our furniture and fittings. We've disclosed it there. We've had depreciation on our plant and machinery. We've disclosed it there. We've got employee benefits expense. We've disclosed it there. We've got a write-down of inventory that you know from the first semester, first term. We've disclosed it there. Now, ladies and gentlemen, impairment loss on mining vehicles. What amount are we going to disclose there? Let's assume that it was only the engine of mining vehicle A that we had an impairment loss on. If it was only the engine of mining vehicle A, what amount are we going to disclose there? The one that we have written off, where was it? There, impairment loss on mining vehicles, 682,703. Now comes my question, ladies and gentlemen. If you get this right, I owe you a big prize. I must buy you a meal at a very fancy restaurant. What are we going to disclose there as depreciation on mining vehicles? Now, I'm going to give you a minute, 60 full seconds, to think about this. Tell me what is going to be the depreciation on mining vehicles for the year. If you can calculate that for me, and if you can then put that in the chat box for me, please. Let me go and have a look at what you've written in the chat box. Competition is on, says Mrs. Greenwood. I hope I don't lose the value of a meal here. I can't really afford it, Mr. Anil Anwas. Pfeiffer says 430,511. Let me go and have a look. 530,511. So far, my meal voucher is still safe. Just barely, but it's still safe. Dale says 138,333. So far, my meal voucher is still safe. Landela writes there 31595. So far, my meal voucher is still safe. Okay, let me relieve you of the misery. I'm going to share my entire screen now, if possible. Right, I'm going to share my entire screen. Let me just see if you do. You see my latest journal entry now? Okay, my question is, what is the total depreciation for the year that you are going to be having, that you are going to disclose in your profit before tax note? What is your total depreciation for the year that you are going to be showing in your profit before tax note? Okay, let's calculate this. Hopefully you can see my calculator. What did we depreciate the mining vehicles by on the 31st July? We depreciated it by, let's type it there, 430,511. Until on we're at that, right? But did we not also depreciate a part, a significant part during the course of the year? During the course of the year, on the, when was it? On the 30th of September. So I'm going to say plus the depreciation on that old engine was 31595. Does that make sense? Do you remember that? So the amount that we are going to disclose as our total depreciation on mining vehicles, if we only have the one mining vehicle for the year, will be 462,106. Right? 462,106. That makes sense, ladies and gents. 462,106. Let me just go through that, then I'll look at your question. So how did we arrive at that figure? Remember, during the course of this financial year, on the 30th of September, we debited depreciation on mining vehicles with 31,595. That was on the old engine. And then at the end of the year, right at the end of the year, on the 31st of July, we debited that same account, depreciation on mining vehicles, with a further 430,511. So if we add the two together, if I've added correctly, then the impairment loss on mining vehicles for this, not the impairment loss, sorry, the depreciation on the mining vehicles for this year was a total of 462,106 rands. Does that make sense? I'm very relieved, Mrs. Boer. I don't think they would have taken me to Panama Jacks, if I just promised a meal I'm sure they would have said, let's go to Panama Jacks, and they would have ordered crayfish of 700 rands there. So I'm pretty relieved that no one got that right. Thank you so much, ladies and gents. That's all from me. If you can just maybe ask any questions. If there are any questions from your side, you can either type it in the chat box now, or you can ask it in person. You're most welcome. I love hearing from you. If you want to raise your hand and ask a question. Any questions from your side? I'm sure you're sick and tired of listening to me now. Yeah, that was a big risk. They could have chosen Panama Jacks or some very special high-priced restaurant. Okay, ladies and gents, then I'm going to stop this recording. I'm going to start a new one as soon as Mr. Borman is ready, just for practical purposes.